My dear learners, we are in the course of MOOCs entitled The Introduction to GST. In the present module, I will be going to discuss the basics of GST, that is the overview of the GST. But before going into the topic, I may discuss about the reform process. We know the reform is a continuous process. If we do not change ourselves or if we do not reform the system, we cannot exist in the socio-economic condition. So, reform is necessary. Reform in indirect tax is also required because tax reform have been an integral part of the economic reform in India, whether it is direct tax or indirect tax. The indirect tax reform for Indian market is earnestly required to be globally competitive. Here I may mention some of the reforms that took place in the indirect tax in India in recent times. We witnessed the reform in indirect tax structure in 1986 when mod VAT under central excise law was introduced. And again we witnessed the tax reform in indirect tax structure when the credit under mod VAT was introduced for capital goods in 1994, and earlier it was not considered. Again, if we consider the reform, we can mention the SENVAT credit rule, which was introduced to unify the rules of input and capital goods in 2000-2001. And again, we can mention the rules for credit of service tax, which was introduced in 2002. And in again 2004, the old SENVAT credit rules, which was introduced in 2000-2001, and service tax credit rule, which was introduced in 2002, were unified. So, it is a continuous process. To cope up with the situation of the ever-changing socio-economic condition, we have to reform the tax structure because the tax is an important part of Indian economy. So, for the reform in Indian economy, we have to restructure the taxation system of India, that is in direct tax and indirect tax. Here we are mentioning only the indirect tax structure. But after 2004, when the SENVAT credit rules and service tax credit rules were unified, we saw the introduction of VAT, that is a value added tax. Value added tax was enforced from 2003-04. Under VAT, the tax was levied on each value addition in case of interstate sale or purchase. And at that time, central sales tax was levied in case of interstate sale or purchase. But after that, the major tax reform was introduced in terms of goods and service tax. In India, 1st July 2017, the goods and service tax was introduced throughout the India. The major objective of goods and service tax is to unify or subsume all the indirect taxes which was levied in India on goods and services. But after implementation of GST, most of the indirect taxes have been subsumed. Let's see what was the picture before the implementation of GST in 2017. We can see that before implementation of GST, there are two types of indirect taxes. Central government imposed the or levied the indirect taxes on certain items, and state governments were also empowered to levy and collect the indirect taxes. So we can say the central government imposed certain indirect taxes like central sales tax, customs duty, excise duty, and service tax. On the other hand, the state governments were also empowered to levy and collect the taxes like VAT, luxury taxes, electricity duty, entertainment tax, and entry or octroi tax. So there are two types of indirect taxes before introduction of GST. But after introduction of GST, most of the taxes, most of the indirect taxes have been subsumed. For example, the central taxes like central excise duty, service tax, countervailing duty, and special additional customs duty have been subsumed. And amongst state taxes, state VAT, the octroi and entry tax, luxury tax, tax on lottery or cess have been subsumed. So we get a common tax system which is called the goods and service tax. Here some of the indirect taxes have not been subsumed. Let's see what type of indirect taxes have not been subsumed in GST. It is basic customs duty. You can find the special additional customs duty have been subsumed, countervailing duty has been subsumed, but basic customs duty has been kept aside. It is not subsumed in GST. Another example is electricity duty, tax on alcoholic liquor for human consumption, tax on sale of land and building, fee chargeable under state laws like fees for sale of agricultural produce, and tax on securities. So remember, these items have not been subsumed. In case of customs duty, the basic customs duty is beyond the purview of the GST. Only the special additional duty and countervailing duty have been subsumed. Now, you would be interested to know what is GST. We are discussing from the beginning the GST. So, goods and service tax. What is it? What does it mean by goods and service tax? Goods and service tax is tax on goods and services which is levied at each point of supply or provision of service, in which the seller or service provider may claim the input tax credit. Against which it will claim? It will claim the input tax credit which he or she has paid while purchasing the goods or producing the services. So, this is the definition of GST. And if you analyze the definition of GST, you can find the features. The important features of GST would be the GST is a tax on supply. Remember it. We do not use here sale or purchase. It is used the supply. GST is the tax on supply. GST is applicable to all goods and services. All goods and services to be taken into consideration. GST is a destination based tax. GST is a tax on value addition. Remember, at each point of supply, some value is added and tax is to be calculated on that value addition. GST provides the seamless input tax credit, because at the time of definition, you have heard that the supplier will get the benefit of input tax credit. That tax paid during the purchase will be adjusted at the time of supply to the next person. So, this is the mechanism. Burden of GST is borne by the final consumer. And all these features will be discussed in the subsequent modules. During the course of study, during the course, we will discuss all these features in detail. What do you mean by supply? What is goods and services? will be considered for this purpose, and how the tax is calculated, because we have said it is a destination based tax, and also how the tax is calculated at each point of supply. So all these items will be discussed in detail in subsequent modules. Now why the GST has been introduced in our indirect tax structure? There are various reasons. We can summarize. For the following reasons the GST has been introduced. The major objective is to converge all the indirect taxes into a single tax. It will create a common national market. It will eliminate the cascading effect, because I have already told you the tax is calculated on each point of sale, each point of supply, and there is a mechanism of setting off the tax paid in earlier transaction. So it will eliminate the cascading effect, that is the tax on tax. As a result, it will reduce the tax burden. Since all goods and services except certain items have been included under the GST, the tax base will be broadened. If the tax base is broadened, automatically the revenue in the hands of the government will be increased. So these are the major objectives behind the introduction of GST. Now you may ask, in which states the GST will be applicable? Like other laws, there are certain exceptions, but in this particular case, in this particular GST Act, whole of India is included. So all states will come under the purview of GST. Whole of India, including the Union Territory. So Union Territory is also included in the GST Act. And Indian territorial water, seabed, continental shelf and other notified maritime zone is also to be considered for the purpose of calculation of GST. So what is the model of GST in India? In India, the dual model of GST has been introduced, because there may be two types of transactions. One is intrastate transaction and another is interstate transaction. So in India, the dual model of GST has been introduced. One is meant for intrastate transaction and another is interstate transactions. So in case of intrastate supply of goods and services, there are two models to be applied. The central GST, central goods and service tax, and another is state goods and service tax or union territory GST or goods and service tax. Because intrastate, within the state, the goods or supply can move from one place to another within the state or within the territory, union territory. So intrastate, in case of intrastate, the SGST or UTGST and IGST both will come into effect. And in case of SGST or UTGST, that is state GST or union territory GST territory, the entire tax will go directly to the respective state or union territory. And the part of CGST, the CGST is collected by the central government. And as per the recommendation of the 14th Finance Commission, 42% is distributed to the state government. But interstate supply, in case of interstate supply, the IGST will come into effect. Let's see what the changes have been made in the present system. So prior to introduction of GST, we have two types of indirect taxes, central indirect taxes and state indirect taxes. But in the GST regime, there is a structural change. Let's see what changes have been made in the indirect tax structure. There are two types of transaction, interstate and intrastate. There are two types of transaction, goods and services. So, in case of intrastate supply of goods, what happened earlier? The VAT was affected. But now, in new tax structure, it would be splitted as SGST and CGST. In case of interstate supply of goods, CST was calculated and collected. And actually, the CST, Central Sales Tax, was levied by the central government but was collected by the state government. But now, the picture has been changed. In case of CST, the entire amount or the mechanism to be controlled by IGST. IGST is to be followed. In the same way, intrastate supply of services, intrastate supply of goods, earlier it was VAT, now it is SGST and CGST. Intrastate supply of service tax was there, now it is SGST and CGST, because there is no existence of sales tax and service tax separately. Now it is GST. So, earlier it was service tax in case of intrastate supply of services, now it is SG and CGST. In the same way, intrastate supply of service, interstate supply of service tax was levied earlier, now it is IGST, because interstate, the service is going from one state to another state. So, you have to consider the IGST. Now, import of goods. Prior to introduction of GST, we had the basic customs duty, the countervailing duty and special additional duty, SAD. Now, in the GST regime, the countervailing duty and special additional duty have been subsumed. So, the remaining portion, that is the basic customs duty and IGST is now effective. In case of import of service, you are importing services. What was happened earlier? It was service tax with reverse charge mechanism. And in GST regime, it is IGST. This table will give you a clear picture about the changes which have been made from earlier system to the present system. I hope you have understood the basics of GST. I have tried to give you an overview of GST, and in subsequent cases, in subsequent modules, the detail about the GST will be discussed. Thank you.